Hey everyone, welcome back to Corporate Decoder, where we decode the secrets of the corporate world. Today we're diving into a filing from Nukkleus Inc that has got us asking, is this a shot in the arm or a shot in the dark? Make sure you're subscribed and join our Discord community linked in the description for more exclusive insights. Nukkleus Inc has just dropped a Form 8K, which is basically a report for current events. The big news here is about a financing deal. They've entered into what they call a common stock purchase agreement, or ELOC purchase agreement, with Accession Group Holdings LLC. Think of it as a flexible loan for stocks. Under this agreement, the company can sell its shares to Accession Group Holdings up to a massive $250 million worth. This is TA one-time thing. Nukkleus can decide to sell shares at different times over the life of this agreement. As soon as they signed this deal, Nukkleus handed over $1.25 million worth of their stock to Accession. This is called commitment shares, and the price for these shares is tied to the market value on the day a special registration statement becomes effective. And to make sure Accession can legally sell these shares, they also signed a registration rights agreement. This means Nukkleus has to file paperwork with the SEC, so that Accession can eventually sell the stock it receives. Now here is the crucial part: Nukkleus is in the driver S seat. They can choose when to sell shares to Accession, but they don't have to. Accession, on the other hand, is obligated to buy if Nukkleus decides to sell, but this is all contingent on certain conditions being met, like that registration statement becoming effective. This agreement lasts for 36 months after the registration rights agreement is effective. Scroll for common shares purchased pursuant ELOC purchase agreement will be purchased from time to time at a price equal to a discounted price of 97.5% T-Scroll. When Nukkleus does decide to sell shares, the price will be a 2.5% discount off the market price. Specifically, it will be 97.5% of the lower of two prices, the average price over 3 days or the closing price on the day of the sale. This helps make sure they get a decent price even with the discount. There are also limits on how much they can sell at once. Nukkleus cannot sell more than 20% of the daily trading volume of its stock on the Nasdaq. This helps prevent big price swings. But here is a really important restriction. Nukkleus can only sell up to 19.99% of its existing shares to Accession. If they want to sell more than that, they need approval from their own shareholders, something that can be tough to get. On top of that, Accession can't buy shares if it would mean they own more than 0.0% of Nukkleus's stock, combined with any shares owned by their affiliates. This is a common regulatory limit to prevent one entity from having too much control too quickly. Scroll for net proceeds under the ELOC purchase agreement to the company will depend on the frequency of sales, and the number of common shares sold to the investor and prices at which the company sells common shares to the investor. Scroll, so what does this all mean for Nukkleus? The money they actually receive will depend on how often they sell shares, how many they sell, and at what price they plan to use this money for working capital and general business needs. Management seems to think this gives them the flexibility to raise money when market conditions are right. Scroll, the information contained above in item IDNI is hereby incorporated by reference into this item SENDNINA. Scroll now, let's talk about how they're selling these shares. The sale of those initial IDN Awuyingli Allion dollars worth of shares. The commitment shares are being sold without registering them with the SEC. They are relying on an exemption called Section C of the Securities Act. This exemption works because Accession Group Holdings has stated that it is an accredited investor. This means they meet certain income or net worth requirements and are buying these shares for investment, not for immediate resale to the public. Essentially, they are sophisticated investors who understand the risks. Scroll on the 19th of September 2025, the company issued a press release announcing the execution of the ELCO purchase agreement. Scroll, to top it all off, Nukkleus also announced this deal through a press release. This is standard practice to let the public know about significant agreements. Now, looking at this filing, Nukkleus is essentially setting up a revolving door for potential share sales to raise capital. This equity line of credit gives them a financial lifeline, however it comes with very clear constraints. They can T-sell too much at once without shareholder approval, and the investor has limits on how much they can accumulate, maintaining a level of control for existing shareholders. The proceeds are earmarked for working capital, which suggests they might need cash to keep operations running smoothly or perhaps to fund growth initiatives. The real story here is about flexibility versus dilution. Nukkleus has the power to tap into this funding as needed, but each sale potentially dilutes the ownership of existing shareholders. The discount price of 2.5%, while small, is still a cost of this financing. A key risk is if the company S stock price falls significantly, it might not be efficient or beneficial to tap this line of credit. Also, the reliance on an accredited investor for the initial sale suggests this is a private placement, likely meant to be a quicker way to get some capital without going through a full public offering immediately. Overall, Nukkleus Inc. seems to be proactively managing its funding needs. The strategy provides a buffer, but investors should watch closely how often and at what prices these shares are actually sold. Significant sales could signal that the company is facing cash flow pressures, or it could indicate a strategic move to fund expansion. The long-term success will hinge on whether they can deploy this capital effectively to generate returns that outweigh the dilution. Alright, that is our breakdown of Nukkleus Inc.'s latest filing. What is your take on this equity line of credit and what it signals for the company? S Future, drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.